AppFolio is more than just a software tool. It is the operating system for the digital transformation of the U.S. residential rental market. Regarding the concern of whether AI will replace AppFolio, my current stance leans toward AI acting as a booster. Data sovereignty. While AI startups may have leading algorithms, they lack the millions of units of private historical data held by AppFolio. Without data, AI is an empty shell, prone to high hallucination. With AppFolio's data, AI can precisely predict tenant default risks or maintenance costs. General AI, like GPT, is polymathic but lacks localized context. It doesn't know the leak repair frequency in an Austin, Texas neighborhood over the last 3 years, or tenant renewal intent under current inflation levels. A high stickiness moat. For a property manager, switching management software is akin to open-heart surgery. The entire company's accounting, maintenance crews, and leasing agents operate under this logic. Switching systems implies total staff retraining and business disruption. This high switching cost ensures a stable customer base even during economic volatility. Execution platform. Many AI startups only provide suggestions. For example, you should raise rent by 5%. AppFolio is an execution platform that closes the loop. When AI suggests a rent hike, AppFolio can directly generate the lease renewal, email the tenant, and automatically update the ledger. Furthermore, property management involves massive escrow funds and compliance requirements. Users trust a licensed system with a decade-long track record to handle funds far more than a pure AI interface. The core AI anxiety. AppFolio must move faster than competitors like Yardi or Entrata in integrating AI features to prevent its moat from being leveled. While AppFolio has a data moat, AI could lower the barrier to entry for new rivals. Previously, developing a full property management system required hundreds of programmers. Now, using AI-native architecture, a new competitor might develop a seamless, automated alternative at a fraction of the cost, sparking a price war. Additionally, if AI drastically improves efficiency, for example, one person managing twice the units, AppFolio must ensure its per-unit pricing model captures the incremental value created by AI, rather than just suffering from a reduced headcount at the client level. 1. Business fundamentals. From bookkeeping tool to industry ecosystem hub. AppFolio's success lies in its deep penetration into the property management niche. Full lifecycle coverage. Its product isn't just for collecting rent. It covers every stage. Marketing, listing, screening, background checks, signing e-contracts, operations, maintenance requests, and finance, accounting, and distribution. 2. Financials. A qualitative leap into the era of profitability. Profit explosion. In fiscal year 2025, AppFolio's free cash flow, FCF margin, jumped to 24.8%, and operating margins broke 25%. This marks the company's transition from burning cash for growth to profitable scaling. Valuation. Normalization. At a $5.6 billion market cap, it trades at approximately 5.3 times forward PS. Compared to the 15 times plus valuations seen in 2021, the current price has shed most of the bubble, reflecting more pragmatic growth expectations. 3. Macro resilience, a hedge against inflation and cycles. Against a backdrop of economic uncertainty, AppFolio exhibits defensive asset characteristics. Essential demand. During downturns, home buying demand may shrink, but rental demand often strengthens as affordability declines. As long as people rent, property management remains essential. Inflation pass-through. 76% of AppFolio's revenue comes from value-added services. As inflation pushes up nominal rents, payment processing fees and insurance services, based on transaction volume or percentages, rise automatically, providing a natural hedge against inflation. 4. The growth ceiling AppFolio occupies nearly 20% of the 50 million rental units in the U.S. However, it is important to note that penetrating the enterprise segment, large corporate clients, remains difficult, as incumbents Yardi and RealPage maintain a heavy defense there. V. Summary. Is the $5.6 billion valuation expensive? My personal conclusion: fair to slightly undervalued. In the 2026 market environment, AppFolio at $5.6 billion represents a high-quality, moderate growth, high cash flow asset. It boasts a clean balance sheet, zero debt, expanding margins, and critical private data in the AI wave. Next earnings. Preview. Q1 2026 results are expected on April 23, 2026. I look forward to seeing the performance APPF delivers. Risk warning. One should remain alert to potential systemic collapses in the U.S. real estate market, such as mass defaults or vacancies, and further downward revisions of valuation multiples across the SaaS sector.